Hello dear learners, welcome to Click Education's online class. Today we are going to study second paper, chapter 4, Capital of Joint Stock Company. Well, first, what is share? Share is the smallest unit of a company's total capital. That means company divided its total capital into a small unit, and per unit is called a share. Moreover, it is a certificate of ownership of the company. A person who bought this certificate regarded as a owner of that particular company. Here I have attached a certificate of share so that we can get a better idea from this picture. Okay. Issuing shares simply refers to the offer made by any company to sell its share in order to accumulate capital. That means when any company offer of its share, sale of its share, it means the company wants to accumulate capital, and whole process goes like this. And corporation takes the help of bank and offer of sale of its share to the capital market or share market, where group of people roam to invest their capital. They also take the help of bank and buy their interested share, and that's how the whole process goes on. Okay. Some important facts about share issue. Fact 1. All the transactions related to share issue must be done through the banking system. That means bank is the key player of share issue process. Okay. Fact 2. Share can be issued at par, at premium, or at discount. At par means at shares face value. Every share has its face value. Face value means a value that is written on its paper or face, whatever you call it. Then at premium means a bit higher of its face value. When a share is issued a bit higher of his face value is called share issued at premium. On the other hand, share issued at discount means issuing share at the rate of a bit less of its face value. Okay. Then facts 3. There are some steps in recording share issue transactions. They are: step 1, receiving application from the interested people. When any company declare that they are interested to sell its share, then interested people apply and subscribe a sum of money to buy their share. Then the second step, company collect the applications and distribute the shares accordingly, as well as transfer the application amount into share capital amount. Okay. There are another step which is optional, that is refund the excess number of shares to its subscribers. That means when any company gets excess number of application from the buyers, they refuse the excess excess number of share and refunded their amount of subscription. It happens, that means step 3 happens only when company gets excess number of application. Okay. Fact 4. Share issuing cost must be entitled to expenses not yet written off. Very carefully listen and note it. There are some costs associated with share issue, and all those costs must be written under expenses not yet written off. Okay. Fact 5. Remember the following carefully. Okay. Share premium, which is liability and must be credited, and share discount, which is asset, must be debited. Okay. Very carefully noted. It will be very helpful later on when we will solve maths on share premium and share discount. Fact 6. There are 3 statements or accounts that are required to prepare in solving share issue problems. That means in your exam you will be asked to prepare these accounts or statements. That is, first journal entries, then ledger accounts, especially bank account, and statement of financial positions, that was previously known as balance sheet. Next, fact 7. There are 2 important terms that we need to study very carefully so that we can solve share issue problem very smoothly. That is, number 1, share underwriter's commission. Share underwriters. Who is share underwriter? Share underwriter is a person or any institution that takes the responsibility of selling the company's issued share. By selling company's share, they gets commission. This is called share underwriter's commission. Another important term is bank commission. Sometimes bank charges commission for playing role in share issue process. Then this is bank commissions. Okay. Other share issuing costs, there may be some other issuing costs, that is declaring IPOs or share issuing to other parties. Then all those costs that arise from issuing shares sometimes entitled to other costs. Okay. Fact 8. Share issued against purchasing any fixed asset, machinery, building, plant. Very carefully. We have to note that share can be issued against any purchase of fixed asset, that is machinery, building, land. Okay, move on to next. There are types of the capital of joint stock company. There are 4 types of capital in the joint stock company. There are authorized capital, issued capital, subscribed capital, and paid up capital. Authorized capital is the amount of capital for which any company is registered, and that's why sometimes authorized capital is called or also known as registered capital. Issued capital is the amount of capital that is issued in the capital market for sale, and another important fact is issued capital is the portion of authorized capital. That means a portion of authorized capital that is issued is called issued capital. Then subscribed capital. Subscribed capital is the amount of capital that is actually distributed to the subscribers of the shares. It is also the part of or portion of issued capital that is actually distributed or actually hand over to the subscribers of the shares. Then comes paid up capital. Paid up capital is the total amount of capital that is actually collected from the buyers. That means this is the final capital that any company accumulates to raise its funds. Okay. Next. Whoa, what's going on? Oh, it's a formula alert. Don't worry, it's a simple formula. C equals to P into N. C stands for capital. P is for per share price, and N denotes number of share. Let's take an example. Beximco Company Limited registered with authorized capital of Taka 10 lakh, which is divided into 10,000 shares at Taka 100 each. The company issued 8,000 shares for sale to public and received 9,000 shares application. Okay, let's solve it. Solution. Here is our formula. C equals to P into N. Authorized capital, we are calculating authorized capital. P here is 100 Taka, and number of shares is 10,000, and thus our capital is 10 lakh. So our authorized capital is 10 lakh. Could you solve for issued capital? Take 10 seconds or 30 seconds. Have you calculated it? Yes, you are right. This is 8 lakh Taka. This is 100 Taka into number of issued share, that is 8,000 shares. So 8,000 into 100 equals to 8 lakh. Okay. Journal entries. Now we will learn or study journal entries. 1. Transaction 1. When application is received from the buyer. So far we have known bank is the key player, so money will be received through bank, and that's why bank account debit, share application account credit. Very carefully noted. Bank account debit, share application account credit. Okay. Transaction 2. When amount of application or subscription Taka is transferred to share capital account. Then the journal is share application account debit, share capital account credit. Okay. Transaction 3. When the amount of excess number of applications are refunded. That means we have returned the number of excess application. Okay. The journal is share application account debit, bank account credit. That means in journal 1 we have debited bank account, and now we are crediting bank account. Okay, and note that journal 3 is just opposite or reverse of journal 1. Very carefully remember that. Okay, move on. Journal entries continued. There is a suggestion or facts that we can combine journal 2 and 3 and can write one single journal, and that is transaction is when you transfer the application subscription amount into capital account and record the refund together. That means you will combine, or you can combine journal 2 and 3 and can write a single journal, that is share application account debit, share capital account credit, bank account credit, which was previously like this. Journal 2, share application account debit, share capital account credit. Journal 3, share application account debit, share bank account credit. So we combined both share application amount and write it as debit, and other two capital account just recorded as follows. So the fourth journal we can write share application account debit, share capital account credit, bank account credit. Okay. Journal entries still continued. Journal 5, transaction 5. This is journal to record underwriter's commission. So underwriter's commission account debit and bank account credit, because we have to pay underwriter's commission through bank. Okay, final basics. What is it? Good one and very important. Share can be issued to the public against fixed assets or to the directors or other parties. So that's all about basics. Now we will move on to solve a practical problem. I have attached a PDF file of that math. Please download it and follow the videos to solve the problem. Thank you. Well, here is our math that we are going to solve today. Let's read the requirements first. A. Record the journal entries in the book of the company. B. Prepare bank account. So, according to our requirements, I have already prepared table for journal entries and a ledger account named bank account. Okay, let's read the question. Practice problem 1. Beximco Company Limited registered with authorized capital of Taka 10 lakh, which is divided into 10,000 shares at Taka 100 each. 10,000 shares at Taka 100 each. The company issued 8,000 shares for sale to public and it received 9,000 shares application. Company issued 8,000 shares for sale and received 9,000 application. Okay. Additional application money is returned to the applicants. The underwriter charged Taka 0.60 per share as commission. Okay, let's solve the problem. From our discussion, we have already known that we have to record transaction related to share issue from the application received. Here in our problem, the Beximco company has received 9,000 application from the public. So we have to put journal for that first. Okay. One thing I should mention here, since there is no date, I have used serial number to record or number the journal entries. Okay, 1. For receiving application and to record that, we have we know we have to write first bank account debit and share application account credit. Okay, since we have received 9,000 application and each share costs Taka 100, so 100 into 9,000 is 9 lakh. So 9 lakh Taka debit and 9 lakh Taka credited. Okay, done. Let's move on to next journal. Next, we have to transfer this application amount into share capital account. Okay, so the journal 2 should be share application account debit and share capital account credit. Okay, we have issued 8,000 shares, so only the amount of 8,000 shares should be transferred to capital account. So 8,000 shares into 100 Taka equals to 8 lakh Taka should be debited to this transaction. Okay, so 8 lakh Taka debited, 8 lakh Taka credited. Sorry, 8 lakh Taka credited. Okay. Next, we have to record the refund transaction. Here from our question we see additional application money is returned to the applicants. How much the additional amount of application is? 9,000 minus 8,000, that is 1,000. So 1,000 share amount must be refunded to the applicants. Okay, so journal number 3 should be share application account debit and bank account credit. Here the amount should be 1000 into 100, that is 1 lakh. Okay, 1 lakh taka debited, 1 lakh taka credited. Okay, done. Then read the last line of the question. The underwriter charged taka 0.60 per share as commission. We have already known from our discussion that underwriter is a person or company that takes the responsibility of selling shares on behalf of company. So Beximco Company Limited has appointed an underwriter to ensure its selling of shares. So transaction number journal number 4 should be underwriters commission account debit and bank account credit. Okay, why bank account is credited? Because we know every transaction is operated, share issue related transaction is operated by bank. So either bank should be debited or credited to record the share issue transaction. Okay, underwriter charged 0.60 taka per share. So as the company issued 8,000 share and underwriters sold 8,000 share on behalf of company, so underwriter's commission should be 8,000 into 0.60, that is 4,800 taka. So 4,800 taka debited, 4,800 taka credited. And that's all about our journal entries. We have to record 4 transactions from this math. Okay, let's do the ledger account. Okay, we need just the journal entries to record the bank account. Okay, we can see from our journal entries that in journal date 1 or serial 1, bank account debited. Then in journal 2 there is no bank account, so leave it and move on to next journal. And there is third journal, there is bank account credited, so we will consider this transaction. And next in journal 4 we see bank account credited, so we will consider it. So there is number 1, 3 and 4 should be included into our bank account. So date 1, we have to write share capital application amount, share application account, and since bank is debited for this share application account, so we should write into debit 9 lakh debit and balance thereby 9 lakh. Okay, then move on to transaction 3, and though I'm writing serial number instead of date for this maths. Okay, in transaction or journal 3, bank account is credited, so we should write share application account and write the 1 lakh taka to credit side. Okay, 1 lakh that is, and the balance should be 9 lakh minus 1 lakh, that is 8 lakh. Okay, please ignore the Excel mechanism. I have used Microsoft Excel to record this transaction and ledger account, so ignore them and just focus on the accounting solve. Okay, then transaction 4, there is underwriters commission under underwriters commission account, okay, account, and bank is credited for this transaction, so we should write it on our credit side 4,800, and though this is credited, so we should subtract it minus and 4,800. This is 7,95,200 is our final balance of bank account. Okay, this is the solve of our math. This is the journal entries, and we have prepared bank account. Oh, I forgot to sum them up. Let's do this. This is sum 10. So sum of our journal entries is 18,04,800. Okay, we'll meet on next video. Thank you.